This video is going to cover the US dollar. I'm going to first look at some of the quantitative things like the RIDEX fund flows and the commitment of traders data, and then look at the Elliott wave pattern, some of the more qualitative aspects of what's going on. And this first chart is a chart of the US dollar index, so the value of the dollar, and then this is showing how much money is going into funds that will increase as the dollar declines or as the dollar weakens. And you can see since June, last time we looked at this, the amount of money going into these funds has continued to explode up and is back near its all-time high here from 2007. So from a contrarian point of view, when you see the money going in like this to an extreme degree, it's time to consider betting against the continuation of that trend. Now I'm also going to show commitment of traders data for the US dollar, and this is a chart of the US dollar, and then this is the commercial or traders or the smart money, and these are the dumb money, the large speculators and small speculators. We can see that as the dollar's been falling here, the smart money has continued to increase their exposure on futures contracts on the dollar. And counter to that, we've seen the dumb money, the speculators, continuing to get further net short as the dollar's been falling. Here's the zero line, so anything below that is short. Again, here's a zero line, so that's net short below that. The mirror image of that is apparent on the euro. As the euro has been increasing here, the smart money has been getting bearish or short on the euro, and the speculators have been getting increasingly bullish. So those things taken together, some of the hard dollar data actually showing what people are doing with their money and how they're betting on the movement of the dollar and the euro. From a contrarian point of view, you would expect when it gets to an extreme degree outside these standard deviation bands, these red and green bands, then you want to start betting on a trend reversal. Now, I'm going to show a chart next of the Elliott wave pattern that I believe is occurring. Now, this is a chart of the US dollar index, and what this is showing here is a potential A, B, C flat pattern, and I've talked about this potential in the last video update. And this green trend line here is showing the wave 2 to wave 4 trend line. If that gets broken, there's a pretty good chance that this decline in the dollar is complete. Another technical thing going on here is you have this crash low in the dollar in December, and then just this last week there was a slight undercut of that level, and then the market advanced back up above it, and on a closing basis, and it advanced above this wave 3 low. So both those things are actually pretty good chart-based signals that we may have actually already seen the bottom of this decline be in. This dotted green line here I'm using as a potential buy stop area for the UUP ETF, which will look pretty much like this for a potential trade on the dollar. Now this is showing, this is from barchart.com, and this is showing a monthly chart of the US dollar index, and this goes all the way back to the year 2000. And again, I've showed this chart before, but the dollar has been in a long-term bear market, and then this past year and into the first part of this year saw the biggest percentage advance compared to any of these other advances in the dollar. Since then, there is what appears to be a relatively standard ABC flat pattern. So when you see this potential trend change, and then you have a flat pattern here, the expectation is for the price of the dollar, or value of the dollar, to actually completely retrace this last move down from 90 to 77 in less time than it took to form. So if this is indeed a flat pattern, then that would be the expectation of what will happen following that. I'll zoom in a little bit here to a weekly chart, and it's showing the same pattern happening here. off of the lows last year, strong advance, and then here's the ABC pattern I showed. So that's putting it in context, in that I believe that we're seeing excessive bearishness on the dollar, and the pattern is suggestive of a very long-term advance in the dollar, a large amount and a long-term advance. So if you go back through the charts and you look at what happened to the stock market on these advances during the dollar, there's an inverse relationship. The market gets hammered as the dollar rises. So if the dollar does make a big advance, that's going to be pretty devastating for the stock market, and that's one of the reasons I'm showing this, is helping, hopefully helping to understand how those two markets relate. And the video I'm going to show next is going to be on the S&P 500 and just general stock market related data.